Today we find a lot of value in closed-end equity funds. The continued economic growth, growth in employment, growth in corporate profitability, and growth in company dividends, we think contributes to an environment where you want to own more equity-oriented closed-end funds than an ordinary environment. We're particularly attracted to emerging market equity funds, which are available at 11% plus discounts today. Another area which we find attractive in the current environment are municipal fixed income closed-end funds. Right now, muni funds are available in the marketplace at around 7 and 8% discounts. And our work has shown that when you're able to buy muni funds at 7 to 8% discounts, they offer very, very attractive forward returns in the 8 to 9% area, which in today's fixed income world, we find very compelling. When we're looking at the closed-end fund market, the first question we're asking is, what part of the capital market is that closed-end fund focusing its efforts on? What's the asset class that it's targeting? So the first question is, are they focusing on stocks? Are they focusing on fixed income? Are they focusing on precious metals like gold or silver? So we're looking first and foremost at the underlying asset class. Then we want to evaluate the investment manager. What kind of a steward of shareholder capital has that investment manager been over time? What's their track record of delivering total return on net asset value relative to their competitors? So first the asset class, then the investment manager and their record as a steward of capital and how good of a track record that they bring to the table. And then finally, it's important for us to consider valuation. What kind of a discount to net asset value are we able to buy that fund at, and what are the prospects for current distributions to remain steady over the coming months? We think active management in the closed-end fund area is very, very important. The market values of closed-end funds can shift significantly from day to day. Most closed-end funds trade like micro-cap stocks, so a little bit of volume, more volume to buy or more volume to sell can cause significant changes in closed-end fund valuations, how they're priced relative to their net asset value. And so when you have significant shifts in the marketplace, like the recent sell-off in 10-year Treasury bonds that's been experienced since September of last year, or the recent upset in the stock market where the S&P 500 fell like 12% over a couple weeks, that can cause significant shifts in how the closed-end funds are valued in the marketplace and create opportunities for us to either be a buyer or seller of closed-end funds. So we think active management is very important in the closed-end fund space. We think a fund of closed-end funds or a basket of closed-end funds in somebody's investment portfolio is a nice complement to either their equity part of their asset allocation or their fixed income part of their asset allocation. The reason we say that is that the equity part of someone's allocation is generally a bit more volatile, and given that most closed-end funds use leverage in their capital structure, their net asset value and often their market prices tend to be a little bit more volatile than an investment that doesn't employ leverage as part of the investment strategy. The reason I say it may be complementary to their fixed income asset allocation is that most closed-end funds pay relatively high distribution yields, either monthly or quarterly. And the average closed-end fund today is paying a distribution of about 7.5%, which compares very, very favorably with the kinds of income streams that are available to investors, whether they're investing in corporate bonds or high-yield bonds or tax-free municipal bonds. So either as a complement to equity or as a complement to fixed income, we think is the way to think about a basket of closed-end fund investments.